Welcome to the latest episode of the Forecast in 5. I'm your host, Seth Katz. Joining us today is Chang Liu, who serves as President and CEO of Cathay Bank and its holding company, Cathay General Bancorp, where he serves on both entities' board of directors. Chang has 3 decades of experience in the financial services industry, and since joining Cathay Bank in 2014, he has held various leadership positions of increasing responsibilities, including Executive Vice President and Chief Lending Officer, followed by Chief Operating Officer, before being named President and eventually CEO. Chang prides himself on his ability to think outside the box, to formulate innovative and effective responses that minimize risk, and to deliver workable and timely solutions. Additionally, Chang is successfully leading Cathay Bank's digital transformation efforts to enhance the bank's online and mobile platforms to unify seamlessly across different devices. Welcome, Chang. Appreciate you joining us today.
Seth, thank you. I'm delighted to be here.
Well, let's get started with some questions. Since its founding in Los Angeles in 1962, Cathay Bank has grown tremendously, as it now has 63 branches across 9 states, along with an international presence in Hong Kong, Taipei, Shanghai, and Beijing. What do you believe has allowed the bank to successfully expand as it has?
I think the success of the bank really goes back to kind of the roots of the bank. The roots of the bank was founded to help the immigrant population that wasn't getting the banking products and services. And that wave started in the 60s with immigrants from China. We then later had immigrant waves from Hong Kong, from Taiwan, and over the last decade or so, again, more from China. So we've been able to serve that population, both the newer immigrants as well as immigrants who's been here for several decades, to help build their businesses, small to mid-size, as well as any other real estate acquirers, investors, and those kind of things. At the end of the day, I think our success is really dependent on our people. Our people are our best assets, truly. Without our people, we can't really engage with our clients. And in order to be successful, we have to have the best client engagement. We have to be able to deliver the best client experience. And we rely on our people to be able to do that. At the end of the day, I tell my folks all the time, which is money is money. Whether it's our money, somebody else's money down the street, they might be separated by 20, 25 basis points, but it's the service and the execution that we have to be able to deliver in order to distinguish ourselves from everybody else.
Completely agree with the importance of that client experience. You assumed the CEO role at Cathay Bank in 2020 amid unprecedented levels of economic and social uncertainty. As you reflect back on that time, what were some of the biggest challenges that you were facing as a leader? And how has the bank evolved since then?
Great question. So we had to adapt very quickly. We had to make quick shifts in technology, deploying laptops, making sure everybody had access, information security, and everything else. They had to make sure everybody can be able to log in online, whether it's sort of desktop direct, whether it's laptop access, and also adjusting to everyone's different work schedule, whether it's remote or hybrid. 27% of the workforce were all branch frontline facing. When they talk about frontline workers, I honestly think that our people were kind of frontline as well. They were there every day of the week. Our schedules didn't really change unless there was, a COVID outbreak and we had to close the branch for cleaning for a day or so. But, at the end of the day, it's really about adjusting, getting technology to people, giving them access, and adjusting the office part of the team group to adjust to either hybrid or remote. I think really what we've learned from this or evolved since then is how do we adjust to hybrid today? I don't think it's easy to manage somebody that's fully remote. So I'm not a big proponent of continuing to hire somebody fully remote. I think we've adjusted to hybrid to 3-day or 4-day a week, depending upon your role and job class, et cetera. And that may or may not continue. I think there's a lot of engagement to be had walking down the office or the hallways and talking to your peers or other team members across your different platforms. So I think that's always going to be important. I think we also learned through that sort of COVID process or that pandemic, just how we engage with our clients. It's really important for us to kind of push out technological transformation. We have to learn how much engagement they want through technology, through their cell phones. We have a certain population that wants nothing but come into the branch. But for those clients that want to access us and talk to us or engage with us or conduct transactions strictly on a desktop or on a cell phone, I think we have to be able to provide them with the capability and the ease of use, which is also very key to keeping the clients engaged.
Those are all excellent points. In recent years, you've assumed board roles with two California-based organizations. That includes the Federal Reserve Bank of San Francisco and the Federal Home Loan Bank of San Francisco. Can you touch on the importance of these roles?
Sure. Federal Reserve Bank of San Francisco is really quite an honor for me to be asked to join. It gave me an opportunity to learn kind of behind the scenes how some of these Fed open market committee interest rate decisions were made. At the end of the day, what the purposes of these kind of boards and different regional boards of San Francisco is to take different industry leaders and get on the ground information directly from what's happening in their industry, whether it's price or inventory or supply chains or sort of workers and salary cost or anything like that. And all of that kind of rolls up into, in my example, the San Francisco office, and all of that feeds into FOMC. So instead of just purely looking at economic data, which is kind of looking in the rearview mirror, they tend to use these kind of different boards in different regions to roll up on the ground information in order to help them to make decisions. So I think that's been a great experience for me. Federal Home Loan Bank San Francisco, just the same. Being on that board kind of helps me to understand a lot more now about what that bank does, which is really provide access to low-cost capital for all of their member banks, credit unions, insurance, even the CDFIs. And the mission of the bank is really to provide affordable housing to the communities that we serve. So, all of their profit is intended to be directed towards adding to more affordable housing inventory to all the communities.
Thanks for sharing more on both those organizations. You spent your entire professional career as a banker based in Southern California, and your progression to CEO after starting at Cathay Bank a decade ago has been very impressive to follow. Do you have any pointers for those who might be watching and have aspirations to move on to a CEO role like you have?
That's very kind, Seth, but I think I was just at the right place at the right time. Luck had a lot to do with it. But I think some of my sort of operating philosophies is I kind of put my nose to the grindstone. I get the work done. I get the job done. I put in 120%. And I care most about what's best for the bank. When I have to make difficult decisions, yes, I have to take into account of clients, shareholders, team members, everything, and what might be best for someone. But at the end of the day, I have to make decisions on what's best for the bank. The other thing that I operate on is I really don't worry about things outside of my control. For example, we just had the November election, right? The nationwide, the presidential election. Some may applaud the outcome, some may not be happy with the outcome. But at the end of the day, it's outside of your control, right? So that's some of the things that I think we have to kind of think about is focus on what we can control, focus on what we can influence, and put 110% into that and really kind of make sure that you're delivering the best results that you can, whether it's for your team, for the organization, or for yourself, right? So I think that's really the important thing that I kind of operate on is just kind of operate that way. Be humble, be respectful of others, truly listen before you jump in with a decision. I think a good leader has to learn, in my mind, keep quiet sometimes and really learn to listen before you start making assessments or provide some directions.
Listening is key. I like how you reflected on that. With all the competition and changes we're seeing across the banking industry, where do you see the profession headed in the next decade?
Banking hasn't been easy. Since spring of 2023, with the failure of some of the larger banks that we've heard about, risk controls, risk assessment, the framework of risk, all of that has seen increased scrutiny from all of the regulators across the board. So we're having to manage that. I joke that, are we in the risk business or are we still in the banking business? But at the end of the day, there's a report out there, I think, by one of the industry groups. We're currently at about 4,500-ish banks across the country. That particular industry group report believes or forecasts that by 2035, that number is going to dwindle down to a little over 3,000. So I don't disagree with that. I think I see a consolidation coming. I think the bank sizes that are smaller, community, even regional, less than 10 billion, I think you're going to have some considerable cost to deal with, and not everybody can be able to bear that cost. So there will be more consolidation coming. And I think that's the challenging part of it. The other challenging part of it is really the people. Even since 2008, I went through that downturn in the recession. So from 2008 all the way through, say, 2012, 13, kind of the word banking was kind of a bad word. Nobody wanted to be in banking, right? So there's a gap, I think, in talent where, when you go beyond sort of my age group or even the sort of the mid to late 40s, that there's not a lot of young people that's attracted to the banking industry. So that talent pool is continues to shrink.
Got it. Well, that brings us to the end of today's episode. Chang, thanks again for taking out some time to be with us.
Seth, thank you so much for the time and the opportunity to speak with you.
Of course. And thank you to all our viewers for tuning in. We'll see you in the next episode of the Forecast in 5.